Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the stock market, some indicators, the magnificent seven stocks, and earnings reports from this last week. Any stocks of note that jump out to me. And let's get started with the fear and greed index. So you can see on CNN, we are down into fear, and on pie vesting, we have gone back up into greed. So did get down to this 50 neutral area a couple times and coming back up. And if we take a look at the S&P 500, something of note here that happened on the daily is that this orange line, the gold orange line, that's the 50-day moving average. The price of the S&P 500 did get above that. So a close above that, for me, does say that we are getting to be bullish again in the stock market. You can see we did have this fake out. So I guess if you're looking for more confirmation, you could wait until we have a whole candle body close above that line. But to me, this is a good sign because we were getting lower lows, lower highs, lower lows, lower highs. And then all of a sudden we get a higher low and a higher high. So that's at least on the daily time frame. Going over to the weekly, we've talked about this many times, how we ran up like 25% inside of half a year, which is crazy. So it's expected to have a pullback at the very least. And on the weekly, it pulled back to the 20. Those are the red lines right there. Pull back to the 20, as well as this 1618 line, and is going back up. So if there ever is a more massive correction, I'd be looking at the 50-week moving average as well. Going back, you can see how when it gets underneath the 50, that shows a reversal in the trend. Here, as you can see from the COVID crash, it just kept hitting the 20-week moving average, and a little bit before, it's not too abnormal to come down to the 50 as well. Anytime it's at the 100 or underneath the 100, that's the light blue line. That is a really good time to buy. The dark blue line, that's the 200-week moving average, and that is a great time to buy. So we haven't been at those levels since October of last year. So you've had to be very patient, but not every stock is doing this exact same strength of move right here. So there is value out there. You just, whatever stocks you like, make a list of them and just check them once a week. And the moving averages can be one place to start. Let's go over to the VIX, which is the volatility of the markets. And the VIX index, as you can see, macro-wise, we're still in this downtrend. We were just talking about lower highs, lower lows. And we did spike up again, hit that 200-week moving average, and have come back down. So maybe as I take the cursor here, we might come back down, have another spike, and then just keep going lower. So overall, the volatility is back to the low area. And when we take the VIX divided by the VVIX, and the VVIX is the volatility of the VIX, we get a chart that looks like this. And what's nice about this chart is that when we have these dips, those tend to be highs in the market. And when we have the peaks, those tend to be lows in the market. And one nice thing, if you put on a buy-sell signal indicator, those are the green dots and the red dots, we have a sell indicator, and it hit this 200-week moving average, or right in between the 100 and 200. And so it looks like it's going to be coming back down, at least for a little bit. But again, this isn't like a massive deep value time for stocks overall, but this does signal that maybe we are going to be going back up and reversing the trend that we just saw. Real quick, the U.S. 2-year, or the U.S. 10-year minus the 2-year. This is important to keep an eye on because this is the yield curve inversion. Really simplified as rates change. You all have heard about how rates have been raised and they're being held higher for longer by the Fed in order to squash inflation. When that happens, that inverts this yield curve. We're talking about 10-year, 2-year bonds and all that. When it uninverts, The bottom of the stock market the last couple times has been about a year and a half to 2 years after it crosses this zero line. So just keep an eye on this chart. Once in a while, we're still down here, stuck underneath the 100-week moving average. So nothing to note yet. If we go to the unemployment rates, you can see here, let's put this on a log, and we are still in this uptrend. Nothing crazy of note yet, but if unemployment gets above 4%, maybe to 5%, that's when the Fed may think about cutting some rates, or so they say. Anyways, really quick look at Bitcoin, and then we'll move on to the Magnificent Seven stocks. Right now it's on the monthly. Let's go to the weekly. I do videos every week. Look at the Bitcoin rainbow chart, fear and greed index, all that stuff, and the Bitcoin price action. And Bitcoin, similar to the S&P, look at this on the weekly. It got down to the 20. It's had this weekly sell-off. We've noted how since the bottom, we've had these 1, 2, 3, 4, and now this is the fifth correction. That from the high to the low, it's been about the low 20%. Again, this is the fifth time that's happened. It could get down as much as a 50 or maybe one of these fib lines. Something I've talked about before too is how if it did close underneath this 100, the next area was this price structure back here around 52,000, and we had the 200-day moving average as well. It didn't. We had a nice good bounce up, but right now you can see Bitcoin on the daily. Yeah, I would like to see this close above the 50-day moving average and confirm a switch of trend. So you can see here we have lower lows, lower highs. Well, not really here, but lower lows, lower highs, lower lows, lower highs. If this starts to go up and get above this 67,000 level, as well as a close above the 50, I think that'd be good for crypto. And then going down to the Magnificent Seven stocks. Let's start with NVIDIA. So what's nice about NVIDIA, we have a buy signal, and we got back above this 50-day moving average. And zooming out, you can see some of these fib lines here. And I know this fib's not exactly perfect, but I did drop from the prior high to low. And something to note is that on these fib extensions, the 1618, the 2618, the 3618, NVIDIA has come up to those extensions each time and bounced off and come down to a moving average and then continued up. So the last time we got up to the 3618, bounce off, came down, and it's been checking down here the 50-day moving average and coming back up. So if NVIDIA gets through that 3618 level, I've talked about how the next area to watch for would be 1100, or somewhere close to that, around the 4236. I redrew the fib before. I was playing around with it, kind of screwed it up. That's why the lines aren't perfect. But nevertheless, if NVIDIA gets above 1,000 sometime this summer, hey, if you bought any of it down here, it might not be the worst time to think about taking profits, because back in 2022, NVIDIA, God, the price was around 140, even a little bit lower, 115. So yeah, if you got something around a 9-10x inside of 2 years, that's pretty good. And that's also very not normal. So it's okay to take profits. I'm not saying this can't go higher, but the more that a stock gets extended like this, especially when we're considering market cap, something that a lot of channels do not talk about, especially when considering market cap, these stocks can have bigger corrections when the market starts to have bigger downturns. Microsoft, right here, you can see, again, I drew a fib from the high to the low. By the way, someone was asking about drawing fibs, and there's a couple ways you can go about it. So as this is making a newer high from this base, you can go to this fib tool on the left on TradingView, click it, and then click from the low up to the high, and you can go about it that way. I also, because this channel is long-term investment minded, I also put my charts on a log scale. And something else I do is I'll draw a fib from the prior high to the low. And when it's on log scale, when we're looking at price action in between, you can click anywhere on your fib, scroll down, make sure that fibs are on log scale when we're looking for targets in between the prior high and low. When we're getting above that area, we can take a look at these extensions. and the 1618 is at 434, and you can see Microsoft getting right up to that. Obviously, we have our moving averages, those squiggly lines coming up too. Kind of another way, you guys have heard about forward price to earnings ratios. Maybe one day I'll get more into that. I hesitate on that because I want to make my channel simplify investment strategies as much as possible, because it does sound so foreign and complicated to so many people. So part of my goal here is to really simplify how to look at stocks, whether we're getting good value or not. And I don't want to get into the weeds too much. And plus, to be frank, I'm not an expert. And so I can talk about this stuff, but I do believe there are many other better channels out there if you are looking for more advanced deep dives on terminology. Just full disclosure, and obviously not a financial advisor or anything like that. But if Microsoft, because we took this fib off log scale, and we are seeing these extensions. If Microsoft is to get above this 1618 at about 434, next target would be about 570. And Microsoft, best stock in the world, valued at around 3 trillion. So watch this 434 level. If it gets above that, that'd be pretty good. And again, Microsoft having a nice bounce here off the 100-day moving average. Let's go down to anytime we get underneath the 50, I like to go to the weekly too, because there you go. We're down at the 20. And remember what I said or showed you guys is that when we hit the 20 and keep bouncing off it on our way up, that shows we're still bullish overall. So next, let's go to Apple. And guys, in some prior videos, I've been talking about Apple, how it's rare that you see Apple underneath this light blue line. That's the 100-week moving average, okay? And it's about once every other year that we touch it or go underneath it if you average it out since the year 2000. Obviously, we do have some of these bigger corrections, but, you would be sad, of course, if you missed them, because look at that. Apple, all things being equal, is about 25, 15, and it's, gosh, way higher than that now. Great financial crisis, so on and so on. So Apple got to a good deep value area here, hitting that 100-week moving average, and then, oh my God, it just shot up. And if we zoom in on the daily time frame, by the way, you can change the time frames up here, of course. Daily, weekly, monthly, those are my favorite. The 1 year here puts in 1 day intervals, 1 week intervals, monthly. But look at that. Right after earnings, I believe, we had Apple shoot up 9%. That's insane. This isn't a crypto. This is the second top stock in the world, valued at 2.83 trillion, going up 9%. I mean, think of how much that is. Let's just round it up to 10%. 10% of 2.83 trillion, that's like $283 billion if it was 10%, somewhere around that number inside of a day, just flowing in. So yeah, Apple got bought up big time on this weekly 100 and got this buy signal. And looking at this, obviously, if you bought Apple down here, great, good for you. One thing I am a little suspicious of is anytime we see some of these just big giant candles rip up. Not saying it's not a good thing, but sometimes I will see these get sold off pretty hard later on, and it kind of just sucks in liquidity. But we'll see. It kind of a little bit opposite argument I can make there is, as opposed to just buying the dips and catching falling knives, sometimes it's better to buy these sort of V-shape reversals and get confirmation of a swing to the upside. Obviously, we have deep value here at the 100. So if you missed it, yes, you're not getting the greatest value, but Apple's still a great stock that's going to be around for a long, long time. Knock on wood. So anyways, let's go to Amazon. Amazon has a buy signal on the weekly, short little correction to the 200 to the 786 fib, and has a buy signal on the weekly. And again, we're going to draw or click our fib and go down. Let's make sure it's on log scale, because maybe it didn't. Yeah, it's not at the 786. That was off log. My bad. I'd take it off log to show price targets above prior highs and lows. Amazon got above, came back down, had the sell signal, quickly reverse. And sometimes, guys, sell signals can play out for a while. Sometimes they just get bought up and it has bullish momentum. So this level here shows where the prior all-time high was way back here in 2021. If we take this fib off log scale and let's scroll down on the side here, you can see that first extension 1618, 255. That would be my next target should Amazon get above this former all-time high line. We had a little fake out, came down to 20. If it gets above, I'm eyeing that. And Google, which kind of had a similar thing happen. You can see tested all-time highs before, came down. It looks a lot like Amazon. Only difference is it came down to this 50-week moving average. Got a buy signal and it's going up. And the next target up for Google would be 194. So great stocks. And you might be asking yourself like, hey, is now a good time to buy? Obviously, nothing I say here is financial advice. The way I look at it is, one of the first things I do, I just take a look at the chart in the last year. And right now, we're not getting great deep value. Maybe you could have got any of these dips at the 200-day moving average and gotten a better price. But yeah, right now we're in all-time high region. So of course, I wouldn't be buying. It's up to you guys to do your own research. Pick out the stocks, cryptos you like, use, all that stuff. And if you believe in it, and I talk about it on my channel, we look for ways of finding out if we are getting deeper value by putting your hard-earned money into any of these stocks or cryptos we talk about. So right now, not getting great value. Again, doesn't mean it's not a bad stock, but I would take a look for the next chance you can get on one of these pullbacks, maybe down to the 50-week moving average or lower. Next, let's go to Meta. And yeah, drew the fib from the high to the low back here. And Meta, it was getting up to the 1618 at around 567. Came down to the 20-week moving average and it's coming back up. So yeah, let's watch for this 567 level. If you got any Meta down here and you're considering taking profits a little bit before, which clearly some people did, and hey, if you're a whale with billions of dollars, why wouldn't you? Why would you wait to get another 5% more, whatever it is, up here when you can take profits at a really good price if you bought near the bottom? But if we go to the yearly, what else do we notice? We have the 100-day moving average and a buy signal there. I bet it's going to encounter a little bit of resistance at the 50, and then we will see. But if the overall stock market is turning positive, that could be a great thing. AMD, I've been seeing a lot of people talk about this one lately. And what do we notice here? That when I drew this fib from the prior high to low, got up above this little extension. I added these fib extensions to the fib chart. 0.09 higher and lower. Sometimes it's great at catching fake outs. I can show you how it caught the fake out on Bitcoin sometime. Here it was looking like it was catching a fake out, broke above. That seemed really great. But then came back down to the 200-day moving average, going over to the weekly, got down to the 50. But this looks like it's off log, but let me just confirm. Okay, no, it's not. As we take it off log, look at that. The 1618 got right up there to the 230 level. And should it get back above the 1618, we would be looking at 342 next for AMD. There's one other Magnificent 7 stock we're not talking about, and that's, as you guys all know, my least favorite Magnificent 7 stock. It's nothing against Tesla. It's nothing against Elon. It's the fact that, to me, this is a car company, not a tech company. Call it anything you want, slice it however you will. When you take a look at all the data and all that's under the hood, this really is more of a car company, and it's got half the revenue of Ford or GM, and the market cap's like 10 to 20 times higher than both those companies over the last few years. So a couple things to note with Tesla is that it got underneath even the 200-week moving average. And when we draw a fib from the high to the low, it got down to this 236 fib at 141, right near there. We have this big weekly buy signal, of course. I had to go all the way out to the monthly, and look at this. It got down to the 100-month moving average. Now, the last time it did that was in late 2022, early 2023, which, as you guys have seen on the charts, that's when NVIDIA and Meta and all those stocks were at really deep value. And Tesla got all the way down here to 100. Good psychological level to get bought up there. And that 100-month moving average came right back down to it. But overall, macro-wise, it's still in this big downtrend. If it ever gets above this trend line that I've drawn here, and I've said this before, trend lines are only good for as long as they're good for. But if it ever gets above and starts moving up this way, obviously, then we can start talking about a change in the trend. We do have this overall higher low here, and things are wedging up. And I drew this trend line before because it connected back down here. I know it's not the greatest looking thing, but something we can do is we can take this trend line and let's move this around a little bit so we can show more so what's been happening in the recent time frame. And we have price coiling in here. So as we start getting in real tight in these trend lines, which way is it going to go violently up or down? Just taking a look at the timing of it, how it could be later this year. It's my personal opinion, not financial advice. I do think a decent sized recession is coming. And if not a recession, let's say we get a good soft landing, just like I showed you with the S&P 500 chart, it does look like we are due for a decent sized correction on some stocks. And typically when the overall market dips 20% plus, those can be really great times to buy. I'm talking about the S&P there. So this kind of seems to be lining up with when all the euphoria and the good things that might happen in the stock market this year may come to an end later this year. And plus, that's right around election time too. So just something to keep an eye on. And of course, I could be wrong. It's just my opinion. And anyways, let's get into earnings reports. And obviously, that's the crypto fear and greed. Look at that. By the way, crypto fear and greed. Still in this downtrend, but dipped down a bit. Earnings reports. Stay focused. All right. Last Monday, anything of note? Yum China Holdings. No, not going to look at that. Domino's. If you see any stocks here that you like or use, take a look at them on the charts, just like I show you guys. I like to remind people a lot that if there's a stock that you really like and you use their product, that's a great way of having insider information, because if the product's getting worse, then maybe the company is not going to continue to do as well in the long term. But if you really like the product and believe in it, then it could have long-term potential. That's the beginning of how you research. Obviously, take a look at all the numbers, their debt to earnings and all that. Next, we have Amazon here, Eli and Lilly, Coke. Excuse me 1 second. I have a sneeze that's stuck. All right, I'm good. I think I held it off, and now it's going to be worse when it comes out. Eli and Lilly, Coke. We can take a look at Coke. There's McDonald's, more of a real estate company than it is a burger joint. We already looked at AMD. There's PayPal, 3M. That's been a strong dividend stock for a long time. Maybe we take a look at that. So let's do 3M, PayPal, McDonald's, and Coke really quick. And 3M, full disclosure, I do have some 3M stock. And you can see why it's been a good deep value territory here. So we have fib drawn from the high to the low. It's really underneath here, and this thing's beaten down. Now, could it get down even worse? Yeah, this is, in my opinion, an educated gamble. Please do not try to copy or follow my lead on anything. The stocks go down for a reason, but it's at really good deep long-term value. And again, we're looking on the monthly, so this could be a sign of more pain to come. Or, maybe I got some really amazing deep value recently. I don't know. We'll see. But yeah, something to note with 3M. Maybe we're going to have a lot of resistance here. And what is kind of neat to me is you have the 382. Anytime a stock falls down from the prior high, it makes new low and gets back above the 382. That to me is a good sign that it might possibly be getting bullish again. But not just that. Look at what's going on. We have all these monthly moving averages right above there as well. So if 3M ever got through all this crap up to the 0.5 around 123, I would be mega bullish on 3M stock. I think that one's looking pretty good. And next, let's go over to, sorry, just grabbing a napkin here. Let's go over to Coca-Cola. Coca-Cola, always been one of the best stocks there is. Big Warren Buffett stock. He loves this one a lot. And all right, last time we drew a fib, did it upside down. I was playing around with some stuff. Let's do this right. Okay, let's go over to the daily so we can get this as exact as we can. And let's draw a fib from the prior high to the low. All right, and what do we got? All right, we got, I accidentally double-clicked something. I'm using a Mac scrolly mouse pad here. Real professional, I know. I'm already in 26 minutes. I got to hurry up. So Coke, what do we notice? So it came down, made this new low. I've drawn this trend line just because, some things connected. We'll see if it ever matters again. But on the daily, it's looking pretty bullish. Like it wants to get back up to this 786 level at 63.51. As we go to the weekly, strong weekly buy signal as it shot up off the 0.5, the 100, the 50 moving average, and this thing is going up pretty well. So Coke overall looking good. You can see we've been at the 786 level before and really only had a couple weeks where we closed completely above it, and that was kind of a fake out. So again, I'd be taking a look at Coke to see if it can successfully close and stay above and possibly get to new all-time highs. But Coke tends to be a great long-term stock. And let's see, McDonald's, all right, we're at the 100-week moving average, and it has a sell signal. So it came down to the 100-week moving average, back up to the 50, sell signal, it's going back down. And when it's at the 100 or underneath, this is obviously 2020, when it's under the 100, tends to be a deeper, good value time to buy. Gosh, I don't know how old any of you guys are who are watching this right now, but y'all remember, any of you guys old enough to remember McDonald's in the 90s? If you are that old, you know as well as I how much better their food used to taste. So, the stuff, it just does not taste as good anymore, but hey, the stock's still doing well, so that's good, I guess. Market cap of 195 billion. I'd be curious to see how the sell signal plays out. It's really, there's no point in going to the daily because we're going to be underneath everything. But on the yearly, you can see this 100 to 200. Hey, if you really like and love McDonald's and you've done your research, this isn't the worst time. We can also draw a fib here from the prior, where would be the prior high? It'd be right there. Man, made a new high right before just tanking from the prior high to low here. You can see even when it got up to new all-time highs, came back down. And of course, because we are between those areas, make sure we have our fibs on log scale. Good. And we're at the 0.5. And so if McDonald's gets under the 382, that's not too good overall if you were looking to sell anytime soon. But for finding deep value, hey, maybe as it gets closer to this 200-week moving average, you might take a look at scooping some up. Let's keep going with earnings. I'll try to be quicker. That's like my constant battle for any of you guys watching my videos, is try to talk quicker. Oh, I didn't look at PayPal. Son of a... PayPal. All right. PYPL. I knew that, but I forgot. So PayPal, this was a stock that just ripped up during the COVID stimulus times, and man, did it sell off big time. I don't know if any of you guys have seen those charts on Twitter, now known as X, where people show all the different phases of a bull run for crypto and how there's the disbelief phase, the hope, the mania phase, and then the anger, depression phase. Obviously, this one just completely fell through the floor. And if we're just taking a look at how bad PayPal went down, I mean, 80 some percent, 84%. So brutal for PayPal. But again, maybe we can find some great value here. Something to consider. What's the revenue to debt ratio that PayPal is now compared to back then or back here? Without even doing the research, I'm willing to bet that it would be better. Now, I would have to research that to make sure what I just said is true. I don't know if that's true. But I'd be willing to bet 5 years since this time, it's possible this company might have better numbers. I don't know. Do your own research, because right now there's very deep value here. It's getting back up to the 50-week moving average and possibly, showing a sign of a reversal, higher highs, higher lows, all that. If we go to the monthly, yeah, it's nothing we can look at there. But, don't just, when you see a chart like this, don't just throw money at it all because it's like, hey, I'm going to get great deep value and it's going to go back to where it was. There's no guarantee. If you like PayPal, use PayPal, you do your research, you really love it. And when I say do your research, take a look at all the things that are great and all the things that are not great, so you can try to be as unbiased as possible. Don't do research in the way where you just look for anything to confirm your bias or your gambling addiction, saying, wow, this is great, I can get an easy 5x from here. It's not the way to go about it. Try to be smarter than that. But yeah, do your research, and this one might possibly be a great stock to get in at some deep value. But again, this stock fell off for a reason or reasons. And one of those reasons, kind of like I talked about with the stock market, you can take a look here that quite simply, within 1 year, it went up almost 300%. Okay, corrections do happen, but not just that. It fell through all those support areas really bad. So, yeah, a couple of things brought PayPal down for a reason. So do be careful if you decide to go after any of these stocks. We have Pfizer, MasterCard, some other ones, DoorDash. Let's see, I'll only do one or two more maybe because we're over 30 minutes. Shell. Okay, Friday. I think we have Berkshire. Yeah, we have Berkshire Hathaway, a big Warren Buffett stock. Yeah, let's close out with Berkshire Hathaway. Okay, BRK, B or A, either one doesn't matter. All right, Berkshire Hathaway. God, always one of the best stocks. Just nice and steady up. Again, we'll take a look at these moving averages. Anytime Berkshire or any of the super strong stocks are under the 100-week, tends to be a rare, good, deep value time to buy. Or the 200-week. I mean, I'm sure this was freaking everyone out. That was COVID time, so, no one was immune to it. Going over to the monthly, take a look at that. Even if you zoomed out, got down to, like we were showing with Tesla, that 100-month moving average. And then back here, great financial crisis, got down to the 200 moving average. So, just goes to show you, if we did have a very deep, bad recession where a lot of these stocks were correcting, this can be an area to start looking. You can start at the monthly, take a look between the 100 and 200. And again, it's not easy to buy in these areas when it falls down, because this is something important to talk about on this channel, Market Psychology. What does our psychology do to us when the prices get down here? It's like, damn, it's going to go lower. This sucks. Everything's bad. And when things are bad, our instinct is to stay away from it. When in fact, you were probably buying up here or here. And if it gets lower, I'm going to say this over and over again. If you like a stock when it's here, you should love it when it's here. And you should only be putting your money into any stock, crypto, whatever, if you've done your research and drawn out a plan, because that way you can ignore all the noise, all the things that people say, good or bad, and you have your plan that you can stick to. So you're not waiting for the price of whatever asset you have to get to unbelievable prices, and you're not worried about it going bankrupt and just falling through the floor. Nothing's guaranteed. But if you like a product at a certain price, then you need to be able to love it when it's lower, so you don't miss those deep value times to buy. That dumb money gets ruined that way all the time, whereas smart money's buying up these dips. Okay, so we got to be smarter and sometimes be contrarian to our emotions. So that's why I use the moving averages. I also throw in the RSIs, the fibs, everything like that. Berkshire looking great. It came down to the 20. Still in an upward bull trend. Every time, if you have a stock, crypto, whatever, and it keeps staying above the 50 week, in the 20 week, bouncing nicely off there, that's good. When it gets under the 50 week, that's when I get worried. As you can see right here, it gets under the 50 week, boom, it had lower to go. Got above the 50 week, stayed above the 50 week. So that's a good way to tell if a stock might be going lower. But again, imagine being in Berkshire. You may have been buying back here and then it went lower. Okay. We talked about this before, though. If you liked it here, then you need to be able to love it here and be okay with maybe a dollar cost average strategy of, you know what, I'll put in my monthly, weekly, whatever budget here. And if it goes lower, I can put in even more at those points, wherever my plan has me set to get in on some more deeper value. Okay, so do yourself a favor, write down a plan. If you are looking at investing on your own outside of the place you work for, if you have a 401k or you have a Roth IRA, outside of all that, if you're looking to do some extra investing, my channel isn't, I don't want to promote any sort of gambling or even come off like I am an expert on stocks in the market. I've had decades worth of experience in the field of psychology and use that to my advantage, as well as with my math skills. I've always been a good mathematician too, in order to kind of change the way that I buy and sell stocks. And, a big part of that is fear and greed, and where there's deep value. And that so far has worked for me for a while. So just trying to pass along some of that knowledge, and grow a channel here where we have a community of people that are just trying to help each other out and simplify investment strategies. So sorry for the little ramble there. I have a problem. I just can't stop. Anyways, thank you guys for watching the videos. If you're any of my regular subscribers or viewers, thank you guys for coming along. I like doing this for myself. It is a way for me to check the stock market, and just I'm a naturally helpful person at heart, and anytime I can pass on anything, I like to do that too and help out others. And that's the type of channel I want to grow here. So hope you guys are doing well. Maybe I'll put out a video tomorrow. Slowly getting back into putting out more videos. Was a little bit sick. Had a sick pet recently, so a lot of things going on in life that obviously takes priorities over doing these extra videos, as extra side hustle, if you will. So that's why I haven't been making as many videos, but slowly kicking that back up. Everyone's doing well, doing better. But yeah, hope you guys enjoy the rest of your weekend. Take care.